we are starting with financial accounting today, and I suppose everyone is from commerce background or some different.
So I'm from science background.
Okay, and rest are from commerce.
No, sir. Me too, science.
Okay, and I got a response from Ananya. She's from science. Akash from science, and Shipra, are you from science or commerce?
Sir, I am Shipra, ma'am.
Okay, 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 okay. All right, all right.
Yes, sir.
All right, ma'am. Is Are others would be joining, or I need to start?
So I have messaged everyone. If they'll join, then they'll join.
Okay,
Otherwise, you can
okay,
start.
okay, okay, okay. All right. Okay, then let's start. Um, you, as you all are from science background, so we need to talk about some basics of this accounting concepts. So let's start with some basics. So, if I'll talk about accounting is like when suppose we are doing some business, and if I don't go directly into the account, so if I'll talk about the basic things of a business, so we know two things, like we invest some money in the business, and then we want some revenue. Revenue means when we are selling something, so we are getting money in return by selling all our goods and services, and we are expecting some profits, right? So for this we need to have some basic things, like we cannot randomly write some make a column, and we cannot write simply our investments, our expenses, and we cannot write randomly what money we are receiving. So we have some one more we have some systematic things to record for accounting, right? So we have some basics. So let's talk about some basics here. Is we have some costs. We have cost means when we are spending money on few things in our business, and like suppose if I'm talking about some, if I'm dealing with some goods means when I'm dealing with some stocks, or suppose I have a shoe business, so these shoes will be goods for me because I'm dealing with these. I'm purchasing it from someone, some manufacturer, and I'm selling it in profit to our customers. So for that, I need to write all the things systematically in some order, in some classifying manner, that what things I'm buying from some wholesalers, or some in the form of raw material, or in the form of finished goods form, right? And I'm keeping it with me, and I'm doing something. I'm transferring it form and making it usable for the customers. Suppose I'm making these shoes, or I'm packing it for customers in attractive way, and then I'm selling to my customers. So in between what things I'm doing, I'm some keeping some profits for me, because I'm converting it in the usable form for my customers. So we have some basic terms to understand before doing all these, because we have some technical terms afterwards. So for that we need to know a few basic things, like I'll share a screen with you people, and I'll start with few terms. So if you want, you can write down these things with you, or you can simply first pay attention to these terms, and then you can memorize it, so that we may be familiar with these things. So let's start with the basic things. When we start a business, so we need some money to invest in the business, and that money is um, called capital, right? Capital is the money. which is invested in the business, right? Then we have few more terms to understand. Like we have a lot of terms, so few more things I should tell you. And other thing is that if I am doing some business and I'm investing some money in the business in my business, so have to write. I don't have to write it that it is my money, because we are separating my business with myself. If I'm businessman, I'm investing money and I'm investing this money to my business. So I am making my business a separate entity. For example, if I'll talk about some example like Reliance. Reliance is the name of the business, and uh, the owner is Ambani's. ठीक है? Ambani's are owner, and he has not mentioned his name in the business. He has given some another name because he wants to make him separate from his business. So for this, we give some rights to the business so that all the things which are to be done are through business, not by him, not by the owner. So he keeps himself outside the business, or he keeps himself as an employee in the business, so that all the things would remain very in the standard way. So he does not mix his ownership with a business, because business is a artificial person. It is considered as artificial person. Artificial person means like we are persons, we are living beings, and we consider our business a kind of person who makes all the things, yeah, all the transactions which it needs to be done while doing the business. He keeps his business, he assumes his business had he is a some person, like he's capable of taking decisions, all the decisions regarding, yeah, related to its business. Like we have some monetary transactions. If I say about the monetary transactions, like all the transactions related to money, uh, which I have to record in my business on the daily basis, right? I cannot memorize everything, so I need to write it down everything. And on the daily basis which we record, we need to record all the transactions which are related to money. We need to classify these things, and then we need to summarize it.
Hello.
Summarize, right? Yes.
Sir, are you sharing your screen, or you are writing something on screen or something?
Well, is it not visible?
No, no, it is not visible.
Okay, 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 okay. I need to see. Just give me a minute.
And I think so some students are also trying to join. Yeah.
Okay. Mhm. Now, is my screen visible?
Yes, sir, yes, sir.
Okay, okay.
Yes, sir.
Okay. Let's recall few things. Like I started with capital term. Capital is the money which is invested in the business, right? And then I said that I keep my business separate from myself, and I keep this business as an artificial person, and we um, make it a business entity. Business entity, like it has its own identity. Like the same way, if I separate Reliance with its owner Ambani, Like we can see many other businesses, like in our own society, we have some shops, grocery shops. We see the name mentioned in their own names. So they have not separated themselves with their business. So they are individually running their business, and they have not given any other permission to the business to take the decision. So they take the decisions themselves. But in the big businesses, all the decisions, the rights to be taken by the businesses by themselves. So owner is not entering as an owner is not interfering in the business in this way. So all the business decisions are taken by the business only, right? Like giving salaries to the workers, or buying anything for the business to resell, anything which is related to the money. Like if I say that if I'm buying something for the business for resale, or for some asset basis, I'll tell the assets and liabilities terms also. So for suppose I'm buying of suppose I'm buying a furniture for resale, so it is bought just for the purpose of profit making. And if I'm buying a furniture to keep it for my office, so it will be considered as my asset only. So these things, whatever the nature of business, the nature of transaction, is recorded according to their all the other terms. The terms will be mentioned. I'll go through one by one these terms. So but the thing is, all the monetary terms will be recorded, no other things. Like if I'll give example of something like a worker is not well, so will not record anything regarding to the quality, or which does not show any monetary value. So we will not record these kind of things. If a worker is doing very good, so it will be recorded in the way that how much output he has given, so how much products he has made, produced, or sold in the market, whatever is the money value, the things he is doing in the business. So whatever is the monetary value, it will only be recorded. So other things will not be recorded. Okay, and after this, I'll continue with the terms. The terms are what I started with capital. Capital, you all understood. The other thing which I want to say is we have two main things to understand. First is asset, other is liability. Asset means when we own something. Suppose I have bought a car for my business. So I've given money to the seller, and I have bought this for my business. So the car is owned by the business. Now the business is not liable to pay anything in return of that. So the business has right to sell these things according to his need. He can use how he wants to use, or he can sell whenever he wants to sell the thing. So asset means like when you are the owner of a particular thing, and you have the right to use it, and you have the right to sell it. So that particular thing is asset. And a thing, when you are when you borrow something. Suppose I talk about the loan. If I borrowed some money from bank, like that will be considered as a loan. So if I borrowed 1 lakh rupees from the bank, so I need to return that money to the bank with interest. So whatever the money which I borrowed, plus whatever the money which I have to pay additionally, like the principal is the amount which I have borrowed, and interest, which is additionally I have to pay. So the total amount which I have to pay back. So when we are liable to pay something, that is called liabilities. So we have many categories for that. So before starting with the other transactions, or with other the basics of recording the or maintaining the accounts, in the businesses, we need to know few terms like assets and liabilities. And assets and liabilities have further some more categories to be understand. Suppose I'm talking about assets. So assets have two categories. Assets have current assets, current assets, and the other are non-current assets. So if I'll talk about current assets में जो the term which we can see current means the assets which we have already understood, the things which we own for ourselves and which are we are not liable to pay back anything. We have the right to use it. We have the right to sell it, and the assets which we buy for short time period. Like we have a business has a business cycle of 12 months. Like we start our accounting. If I'll specify the dates, if we start accounts from 1st April of, suppose I'll talk about 2024. So I will end these transactions on 31st March 2025. So I have a time period of 12 months to record the transactions. So I'll start my account from 1st April and I'll end these transactions, all the records, all the things which I'll have to close by the end of 12 months. So we use it, we say it financial year or accounting year. Generally, we have a calendar year. Few companies maintain according to the calendar year. Calendar year means the months according to calendar, January to December. But in India, most of the companies follow the financial year from April to March. So I'll talk. What I was talking about is current assets. So if current assets, if I'll use current term means the assets which are bought for a short period of time, or I'll say for a period of 12 months. So I can convert these assets into cash by selling it, by recovering it from my customers. I'll tell the term why I'm saying that recovering it. Whatever money I can realize it. Realize it means when I sell something in accounts. If I say when I'll sell something and I'll convert it into cash. So we use the term realize it. So if you have a pen and paper with you, please write these few basic terms which are somewhere important when you're doing this subject. And then we'll go first. I wanted to tell you all the basics, and then we will go with the syllabus part, which is given in the group in the PDF form. So I'll go with this after these things. So if you want to write these things, you can write it few terms, basic things. Just highlight these terms and write few key points about these things so that you can memorize it. Just write it in the simple and short so that you can, whenever you open your notebook, you just have to see what these terms meaning. And after that, whenever you read the PDF, you will able to understand everything because most of the things are in the very simple language. But the terms which are used in the accountancy are some basic terms which I am telling you, and I'll tell few more things where few more things need to be understand. So If you want these things to write it down, please let me know, or uh, interrupt me in between. You can ask me that I need to stop so that I can wait for you people.
सर कैन यू प्लीज स्पीक अ लिटिल बिट लाउडर? एक्चुअली मेरे को बहुत कम वॉइस आ रहा है आपका.
Okay. Is everything getting the same problem, or is it in some?
नहीं, आई थिंक मेरे को ही है. एक्चुअली मेरे ना घर में कुछ काम चल रहा है इसलिए.
Okay. Because I have closed all my doors, I have no interruption in surrounding, and I'm trying to make it very clear. And the device is very close to me, so if I'll shout, I'll I think I'll not be clear,
Okay, sir.
right?
Okay, sir.
So, shall I continue, or you want me to wait for a minute to write these things which I told you?
Sir, please check again. One more student is trying to join.
Okay, but I can't see here in my screen. Someone is waiting. I have 3 students in my
Yes, sir.
screen, and no one is in the waiting. So please let me know if anyone see that someone is waiting, because I can't see here.
I'll let you know again if there is message again.
Sure, sure. Thank you. Okay, let us continue then. So I'll clear the these terms again. Like I was telling you, the terms which were assets and liabilities. Assets, which I told you, are the things which are owned by the business, and it has 2 more categories: current assets and non-current assets. So current assets means the assets which are bought by the company for a short period of time or for 12 months. And I'll consider a financial year from April to March. So the examples I'll take and I'll write it down here. What are the current assets? Current assets are cash in hand. It's already a cash. Cash at bank. This is already a same thing. Then I'll write stock. We can say another term, inventories. Stock is the thing like the goods, or in the form of, it may be stock have 3 categories. Suppose I have a stock which is kept in my godown. It can be in the form of raw material. It can be in the form of unfinished, or it can be in the form of finished. So finished and unfinished means, like, if I am a producer, suppose I have a business of producing furniture. So what I'll buy for my business? I'll buy timber from some timber merchant. It will be considered as a raw material, for example, timber. And if I have a business of furniture, so I'll use this timber and other more things which are required to make a furniture, and I will complete it and make it suppose I'll make it usable for the customer in the form of sofa or chair or table or dining table, whatever other products. So it can be finished or unfinished. So when it is a finished form, that means it is completed. Nothing is left to be done before selling it to the customers. So it is complete usable form which is just ready to sell. And unfinished means like anything is left, like polishing or anything which is pending to be completed, which is not ready for sale. So that is called unfinished goods. So we have 3 categories of stock. So these things are, the stock is also a short term asset or current asset which I'll keep it for 5 days, 10 days, 15 days, max to max a month, and I will sell it. I'll not keep it for years. So this is why the stock or inventories, you can use it inventories terms. So it has three categories. Then let's go to the other term. We have cash in hand, cash at bank, stock. Then we have debtors. Debtors means customers. If I'm selling anything to my customer on credit, credit means उधार में, ठीक है? I'm simplifying it. Maybe you may few terms are very simple and common, so understood. But फिर भी I'll tell clearly. So if I'm selling any of my goods to the customers, like furniture to the customers on credit basis, so I'll have to recover this money from my customers on some days. So goods which are sold to customers on credit. This money is to be recovered by the business. So the same way, when I am owner of a thing like stock, I have owned this stock and I have a right to sell it. The same way, the money which is to be collected by the business, अगर मुझे किसी से पैसा लेना भी है, that is also considered as an asset for my business. So debtors में B silent रहेगा. Debtors, DEBTORS, debtors are the persons from whom the money is to be collected by the business. So we know that business these days sell their goods on both basis, cash basis and credit basis. So cash basis, so we do not have to take anything else, because in the same time we sell the goods and we take the cash. But on the credit basis, we give time to the customers, like pay it in 10 days or 15 days or 20 days. So we need to wait it. So till the time we do not receive the money, we have to record these things in our accounts, because we cannot memorize all the things. So we need to record it immediately when we sell anything on credit. So whatever is the balance which I have to take from the customer, I have to write until I do not receive it. So next is the same way we have some bills of exchange. Bills of exchange is the same type of thing when we are selling anything to our customers, and on the same time we get some security, like we will receive this money when we want to be sure that if I am selling anything to my customer, and I do not have to be on the side of trust. I don't want to wait for this trust to be gone. So I need to get something from my customer in the form of security. Like I'm sure that the money will come to me. The buyer will not run away and he will not return. So from getting these things, I need to be sure that I'll get the money. So bills of exchange is just a document which I need to get it signed by my customer. So it is just a legal document. I'll say it a legal document which I need to get signed by my customer that he is receiving anything from me for this value, money value, and he will return this. He will give this money to me in 1 month or 2 months. Everything will be mentioned in that document. So this is a legal document which I'll keep with me until he pays this money to me. So this is also a short-term asset. So I'll not wait for this customer in for more than 12 months. So it can be for a 2 months or 3 months. That's it. I'll need to get this money from my customer in a very short time period. But if I compare these two things, both things have same use. Like debtors, in debtors I don't have to get anything signed by customer. I know this customer because he may be a regular customer, or I know him. So I don't want this to be done, because I know that I have a trust on the customer that he will pay this in case of debtors. And in the same way, if I don't trust that customer, I'll have to get it signed on a legal document that he'll pay this money. So I'm secured. My business is secured for these transactions. And these, in this case, I'll recover this money in 10, 15, 20 days, or a month, or 2 months maximum. That's it. So bills of exchange, the term which I'll use when I'm a seller, this bills of exchange document also comes in this side. When a buyer sign this bills of exchange, he will say this document bills payable. And when seller gets this, gets signed by the customer, then he will write in his books bills receivables. So the term which I have to use in my assets, in my, if I'm not telling, I'm doing asset side, right, in the left side. So if I'm recording my all the revenues or my sales, which are the credit sales, so I'll write bills receivable term for the customer from whom I've got this signed, the bills of exchange which I've got signed by my customer. Okay. Next term, which I'll tell you, is a simple short-term investment. Short-term investment. Investment means when we have some money and we want this money to be used, and we want this money to be to get, so that I can get some return, additionally some profit. So I'll invest my monies, and we all know that these days most of us are familiar with this. Like people are investing their money in mutual funds or stocks in the stock market. This is also called an investment. Or if I'm buying some property to sell it on profit, I'll keep it for a few months or years and I'll sell it in profit. So that is also called an investment. And in the same way, if I'm putting something in my business, that is also called investment. But I'm talking about some investment which is for a short time period. So it can be in the form of shares or stocks, which our business may keep it for its future prospect, because they have to keep some arrangements for some future, like if they get some opportunity. So they should have some money in hand, and they should have some assets which can be easily convertible into cash in a short time period. So they need to keep these things, because business needs money on a daily basis. So they have to be prepared for these things. So these are the main terms of current assets. So I'll recall it: cash in hand, cash at bank, stock. Stock have three types: raw material, unfinished goods, and finished goods. Then debtors, then bills of exchange, then short-term investments. Okay. Anyone want to ask anything about these terms?
No, sir.
Okay. So let's continue. Then we'll come to the liabilities part, because these are the very important things. So I'm telling you these things, and before understanding these terms, we will not able to do the accounting, other things of the accounting or recording or whatever we have, everything we have in the syllabus. So we need to understand these things. So liabilities, may I told you that liabilities are those things when we are uh, liable to pay back something to the others. So I'll tell few terms of liabilities. Already given an example of loan. So again, I'll categorize these liabilities into two parts, the same way we have categorized the assets. So one is the same way we have done the assets, the liabilities also have same categories. Current liabilities and non-current liabilities. Current liabilities and non-current liabilities. I think we should use a blank space. It will be more congested otherwise. We will start liabilities part from here. So we will do with the current liabilities first, because I have covered only current assets in the assets part and we have not covered non-current assets. So I'll take these non-current assets in the right hand side. So first, let's cover the opposite side of the current assets. We are doing the current liabilities first. Current liabilities in the same way are the liabilities which are to be paid by the business in short time period, and the time period is maximum is 12 months. So 12 months is the business cycle, the same April to March. So we are a business. If we sell anything on credit, so we may buy on credit also. So we have the related terms which we have used in the asset side. So in the same way, we have current liabilities. Okay, I'll use few terms of current assets here so that we may compare these terms with current liabilities. I've used cash in hand and cash at bank on current assets. So cash at bank, cash in hand is the cash, whatever we have in our business in the form of cash. But we have some opposite terms in the current liabilities, which we have used in the current assets. So if we have cash at bank in the current assets, so we have bank overdraft. Bank overdraft is the opposite of cash at bank. Cash at bank means when we have our own money in the bank and it shows some amount of some balance, like if we have 50,000 rupees in our bank. But bank overdraft means like we have overdrawn from the business, because we have two types of bank accounts, the main two types of bank accounts. Like we have saving accounts, we have current account. Saving account is just for the savers only. Like if I am not doing any business, I'm a salaried person, so whatever I spend in my regular basis and whatever I save it, I want to keep it safe in some place, which is the bank is the most safest part place here, which where I can save money and I can get interest from the bank for that saving part. In the same way, if businesses are doing the transactions on right now, we all know that we have cashless economy. We are just doing all the things through accounts, bank accounts. The same way, whenever we buy anything from the market, most of the time we are paying it in the form of Google Pay or Paytm. So like we are going through the digital economy. So the businesses which they are also doing the same thing, because they do not have cash right now, so they are doing all the transactions on through banks. So through bank they receive money from from their customers, and through bank they have to pay to their suppliers. So if I'll say that if I am a business owner and I'm selling anything I've made, I've produced anything and I've sold in the market, and I have another order from my another customer. So I need to get this thing ready, even if I have that the money which I need to receive from my previous customer. Suppose if I did not get that money from my customer yet, I'll have to wait for that customers to pay back that money. So I have got another order from some another customer. So we cannot deny that person that no, we have not received money, and we cannot make anything new for you until I get my money from my another customer. So that doesn't work in the business. So if I have customers, so I have to manage. So I need money for that. So suppose if I do not have money to produce more things for another customer, so I should have some option to get some funds. So for that part, the banks knows that businessman always need money. So they give some for businesses, banks for give to their bank account holders. Uh, Generally, they are current account holders. Current account holders means they have current account in the banks from where all the transactions are made. So, just a minute. So suppose I've got some order from my customer, another customer, and I need some funds, but I don't have funds from in my bank account, and I have to wait from my other customer to receive that money. So I need money. So I have bank overdraft facility with me. So bank overdraft facility is just like a, if you compare it with a credit card. Credit card is a plastic card which you use while you go to the shopping malls or wherever you go and you make online payments. But that money is not yours money. That is bank's money, which you borrow from bank and you pay back after some time. The same way I have bank overdraft. So bank tells me that you can use this money instantly whenever you need it, and you use this money, and whenever you get your money you can pay back this with your interest, the number of days which I have used the bank's money, so I need to pay back some interest also. So that is called bank overdraft facility for business holders, business current account holders. So if I've used, suppose I do not have any funds in my bank account and I've used 20,000 rupees from my overdraft. So it will show negative bank balance. So negative bank balance is the bank overdraft. The same thing which we have in the current assets, cash at bank. Cash at bank is the money which is ours money. This is ours money. So we do not have to pay it to someone. This is ours money. Whatever we have got from the customer or we have our reserves or savings with us. So this is ours. But this money is not ours. This is bank's money. Until I pay it to the bank, it will show a negative bank balance. So negative bank balance is the bank overdraft. It will be shown in the liability side under current liabilities. Then we'll go to the next term. We had a term debtors in the current assets. Debtors means customers, which we have already discussed. And opposite of this term, which we have creditors. Creditors means when we are buying anything from some supplier on credit and we need to pay the money. Until we pay it, we will record it in our books in the liability side as creditors. So creditors कौन होते हैं? Creditors are those persons to whom we have to pay back. So we need to just learn these terms before we go further. Debtors are the customers from whom we have to receive the money. Creditors are the suppliers to whom we have to pay back their money. Okay. Then we had bills receivable in our asset side. And in the same way, we have bills payable. I think I've already told that this term when we were discussing this bills receivable term. So opposite of bills receivable is bills payable. Again, I'll recall it. Bills payable is a document. Actually, it is a document, a legal document, bills of exchange, which is signed by us when we are buying something on credit and we are signing it for a time period. We are promising this to our suppliers that we are going to pay this money to them in a certain time period. So this is a signed document which is recorded by us as bills payable when we buy something. And this is bills receivable is the document when we are selling something to the customers on credit. So we will record it as a bills receivable. Now we are talking about bills payable. We had another term we had in the current assets, short term investments. Now in the borrowing side and the liability side, we have short term borrowings. Then we have another term, short term provisions. Provision is a new term. Provision is, uh, suppose if I'll compare it with some other term, reserve. So we have another term, reserve, and this is not in the asset side. These all are in the liability side part. I'm not comparing it with the asset side term now. This is an independent term. So if I'll say reserve, reserve term you can understand with the term reserve. Reserve is kuch bacha liya, anything which is left with us and we have kept it for future prospect. So reserve, the provision is the same as reserve, but there is some difference between these two terms. Provision is also something when we are ready to uh, when we are expecting some losses in future, or when we are expecting um, that there would be a certain loss which would be which may happen in our business in this accounting year. I'll use the term loss and I'll name that loss. Suppose if I'll talk about depreciation. Depreciation is the wear and tear loss. Wear and tear loss. Wear and tear loss, a very simple term, wear and tear loss. Um, when if I'll take an example of some car or some scooter, when we buy something, some scooter or motor vehicle, a new bike or new vehicle, I use it for few months or I'll use it for 1 year. At the end of the year, it will not be as same as it was in the beginning of the year when it was bought. It will be older. A few parts will be used up, and the vehicle will be older than it was when it was bought. So wear and tear loss is the same thing which I expect it will happen. It does. I cannot uh, avoid this loss, because when I'm using anything, any machinery or any motor vehicle, it will be used up. It will be consumed. Its parts will get older. It will get some repairs, or it will need some repairs or replacements after some time. So that loss, which I have not paid it in cash, but it happened. This is called the certain loss for which I have to be ready. For that, I'll have to make a provision. Whether I have money or not, but I'll have to be ready for this loss at the end of the year. This is called provision. And reserve is the another term when I'll have some money left with me, I'll after paying everything, or I'll keep this few money aside before distributing any profit to the owner. So it comes from the profit. It comes out of profit. And it does not come, the provision, it does not come from the profit. It is the loss for which I'll have to be prepared, whether I'll get profit or loss from the business, because this is the loss which may happen or which will happen. So these are the few terms according right now I have just told you few terms of current assets and current liabilities, and these terms are to be understand mandatory, so that we may continue more things of accounting. So if anyone wants me to keep some screenshots in the group, or you want me few things or definitions to send in the group related to these terms, so I'll send these. So whatever you say, if you want these, screenshots. I'll put these screenshots. So please tell me what I should do. You want these terms as I have written in this to make you understand, or you want proper definitions from the books so that you can learn?
Proper definition, sir.
Okay, so anything which I've told you related to these terms, anything which is not clear, anyone has doubt, please tell me.
सर अभी करंटली तो नहीं है. Once again we will read. If anything will be doubtful, I will ask.
Sure, sure. Also, I'll put definitions of these terms in the group. You can go through these terms and then we will continue with the more terms and then we will start with our main topics.